Welcome to Drips News, your source for up-to-the-minute coverage. Tonight, we delve into the escalating trade war ignited by President Trump, its ripple effects on the economy, and the political fallout on Capitol Hill. We'll also examine the Democratic response, the administration's policy reversals, and warnings from major corporations about rising consumer prices. Stay with us as we uncover the critical developments shaping our world. Don't forget to follow us online for continuous updates. Trade policies are causing alarm within his own party. Republicans on Capitol Hill are worried that the tariffs imposed on Canada, Mexico, and China will trigger higher consumer prices and a potential economic recession. The stock market has already suffered significant losses. Republican senators like Rand Paul are predicting disaster and increased inflation, while others, such as Chuck Grassley, are seeking exemptions for their states. Despite general agreement with Trump's objectives, there is hope that the tariffs will be temporary. The White House cites unresolved border security issues with Canada and Mexico as justification, leading to retaliatory tariffs and further escalating trade tensions. Democrats are criticizing the administration for alienating allies and driving up costs for consumers. Senator Elissa Slotkin, a rising Democratic star and former CIA agent, delivered a scathing response to President Trump's address. She accused him of prioritizing wealthy donors and implementing policies that would increase costs for average Americans, specifically in groceries, housing, and healthcare. Slotkin asserted that Trump lacks a coherent plan to tackle rising costs and is causing chaos within the federal government through reckless actions, impacting crucial services like nuclear security and cancer research. Her critique extended to Trump's foreign policy, particularly concerning Ukraine and Russia, predicting disastrous outcomes. Slotkin delivered her remarks from Michigan, a critical battleground state, underscoring the strategic importance of her message. In a stunning reversal, the Trump administration is backing down from its plan to terminate thousands of federal employees. This abrupt shift follows a federal judge's ruling that the mass firings of probationary workers were likely illegal. The Office of Personnel Management, OPM, now claims it never mandated the firings, asserting that the decision was left to individual agencies. Judge William Alsup's ruling emphasized OPM's lack of authority for such mass terminations. Critics argue that this reversal is a strategic move to avoid further legal challenges rather than a genuine effort to save jobs. The updated OPM guidance conspicuously avoids any mention of rehiring previously terminated employees. Target CEO Brian Cornell is sounding the alarm. Consumers can expect to see rising prices on produce due to the Trump administration's tariffs on Mexican imports. With 25% levies now in effect, along with additional duties on goods from China and Canada, Target anticipates price increases on fruits and vegetables like strawberries, avocados, and bananas as early as this week, particularly as they rely on Mexican produce during the winter. Target is strategically reassessing pricing across its product range to lessen the impact of the tariffs while striving to maintain competitive prices. For instance, higher prices on Christmas ornaments can be avoided by raising prices on other products. The company aims to keep options affordable for consumers despite the growing costs. President Trump's new tariffs are poised to wipe out profits for the big three automakers, General Motors, Ford, and Stellantis, according to a Barclays analysis. The 25% tariffs on goods from Canada and Mexico, combined with a 10% tariff on goods from China, have prompted retaliatory tariffs from all three countries. Analyst Dan Levy warns that without price adjustments or changes to production plans, these tariffs could severely damage the automakers' profitability. GM and Stellantis, heavily dependent on Canada and Mexico for U.S. vehicle sales, are especially vulnerable. Shares of the automakers have already plummeted, with GM, Ford, and Stellantis experiencing notable declines. Analysts anticipate continued volatility, suggesting potential buying opportunities may arise if stock prices weaken further. Alarm bells are ringing over the potential return of stagflation, a dangerous mix of rising inflation and slowing economic growth unseen since the 1970s. President Trump's tariff policies and recent economic data are fueling these fears. Economic indicators reveal a weakening economy coupled with increasing price pressures. Consumer sentiment is on the decline, with long-run inflation expectations hitting a 30-year high. January saw the largest drop in consumer spending in 4 years, despite rising incomes. A recent survey of purchasing managers indicated minimal factory activity expansion in February, a sharp decline in new orders, and the largest monthly price increase in over a year. Experts caution that these trends, driven by tariff and immigration policies, signal a potentially challenging economic environment ahead. Wall Street was hammered today as escalating trade tensions triggered a stock market plunge. The S&P 500 erased nearly all gains since the 2016 election, falling 1.2%. The Dow Jones Industrial Average plummeted 1.5%, while the NASDAQ Composite declined 0.3%, nearing correction territory. This downturn follows the Trump administration's implementation of tariffs on Canada, China, and Mexico, which have already prompted retaliatory measures. Bloomberg data reveals that over $3 trillion in value has been wiped out since November 6. Automakers like GM and Ford suffered losses, along with companies such as Chipotle, Target, and Best Buy, who have warned of potential price increases due to the tariffs. United Airlines, Royal Caribbean, Citigroup, and Dollar Tree also experienced significant declines as investors reacted to the growing global trade uncertainty. President Trump's State of the Union address starkly illuminated the deep political divisions plaguing the United States. Despite adhering to traditional formalities, the speech failed to bridge the chasm of misunderstanding and contempt dividing the nation. Republican supporters fervently cheered Trump, chanting USA and his name, underscoring the party's transformation into a personal political movement. However, the event also highlighted the fears of millions who believe a second Trump term could be detrimental to the country. The display of Republican power, with figures like Vice President Vance and Speaker Johnson present, further emphasized existing political fault lines. The speech, reminiscent of Trump's campaign rallies, with its fiery rhetoric and demagoguery, deepened the existing divide and raised concerns about national unity during his upcoming term. Data from the UK Home Office reveals a record number of Americans applied for British citizenship in 2024, with over 6,100 applications submitted, the highest since records began in 2004. A significant surge occurred in the final quarter of the year, coinciding with Donald Trump's re-election in the U.S., echoing a similar trend after his initial election in 2016. Analysts suggest the political climate and tax policies in the United States may be driving factors. The increase includes those already residing in the U.K. Concurrently, following Brexit, more Britons applied for Irish passports. These citizenship shifts underscore evolving global sentiments and priorities concerning political stability and economic opportunities. Millions of federal workers are returning to the office after the end of COVID-era work-from-home flexibility, but the transition has been far from seamless. Reports reveal offices lacking essential amenities such as functional Wi-Fi, reliable electricity, and adequate desk space. A Department of Education employee was even injured after tripping over exposed cords, while a Department of Defense worker handling sensitive data was forced to share conference rooms due to space constraints and later relocated to an office without Wi-Fi. These problems are exacerbated by the Trump administration's efforts to reduce the federal workforce and cut government real estate, creating a mismatch between the number of employees and available office space. At least 2 Interior Department office buildings have had their leases canceled, leaving workers uncertain about their future work locations. The situation has sparked frustration and concerns over efficiency and safety among federal employees. President Trump delivered his first address to Congress since reclaiming office, celebrating his initial 43 days and attempting to justify his rapid policy changes. Addressing tariffs, government spending, and international relations, Trump defended his controversial actions, which have drawn criticism from Democrats, skepticism from some Republicans, and reactions worldwide. Trump's address, the longest annual address in recent history, was markedly partisan with minimal calls for unity. He emphasized his election victory, criticized Democratic opposition, and expressed doubt about finding common ground. The address was marked by disruptions, including the ejection of Democratic Representative Al Green after repeated interruptions. Trump's speech served as a strong defense of his policies and a stark reminder of the political divisions in Washington. Former President Trump has repeated a false claim about the amount of financial aid the United States has provided to Ukraine. Trump has consistently inflated the actual figure, presenting a misleading picture of U.S. involvement in the conflict. Fact-checkers have repeatedly debunked these claims, citing publicly available data that contradicts Trump's assertions. Official reports confirm that the U.S. has committed significant resources to Ukraine, but the amount is substantially lower than what Trump has stated. These false claims can potentially influence public opinion and political discourse surrounding the ongoing situation in Ukraine and the role of the United States in providing support. Canadian Prime Minister Justin Trudeau announced today that Canada will impose retaliatory tariffs on $155 billion Canadian dollars worth of American goods, responding to U.S. tariffs, which Trudeau described as a trade war against its closest ally. He stated there was absolutely no justification or need whatsoever for the U.S. action, especially while the U.S. seeks positive relations with Russia. Immediate tariffs will be placed on 30 billion Canadian dollars worth of U.S. goods, with tariffs on the remaining 125 billion Canadian dollars worth of goods taking effect in 21 days. Trudeau emphasized that. That's all for tonight's Drips News, but the story doesn't end here. Be sure to stay connected with us online for breaking updates and in-depth analysis as these critical events continue to unfold. The world is changing fast, and we'll be here to bring you the truth every step of the way. Until next time, stay informed and stay engaged.